This is WPSL Port St. Lucie, the talk of the Treasure Coast.
Thank you, Bull Weaver. Talk of the Treasure Coast. 25 years and counting. Now on Google Home, Alexa, and Echo worldwide. And we have been going back into the archives. I think Money Info has been on for 15 or 16 years. Not really sure, but I know Michael King probably remembers. What are we, 16 years old on WPSL, Mike?
Yeah, I believe it.
Yeah. Oh, man. It's been quite the ride, to say the least. Is Charles with us today?
Of course.
Oh, Charles is with us as well. A good part of that time. By the way, guys, we are envisioning day one of, as Steve Forbes on Fox Business just described GE as the biggest dumpster fire on Wall Street. As the
In the meantime,
yes?
In the meantime, it's up.
No. Are you serious?
The most that it's been up on a percentage basis in 15 years.
No.
And I want to remind everyone, if you saw in the letter or you saw in my daily note about General Electric being booted and Walgreens replacing it,
Right.
you will see that I reminded everyone that the last time a stock was booted out was Alcoa. And from the day that it was booted out on, it was phenomenal. I mean, you're talking about a stock that basically was $7 or $8 that, currently, I don't even follow it anymore because of all of the trade war stuff.
Oh, yeah.
But I bet we made 100% on the option position no less than 4 or 5 times. It would run up, we would sell them, they would come back in. This is very, very common. Also, at the same time, HP came out, and Bank of America came out, and they were replaced, and every single one of those stocks is up 300%.
Oh, my. Well, I think AT&T was up a little bit, too.
AT&T was another one. Yep.
Yeah. Unbelievable. Why did GE, one would think, with, of course, you and Mike aren't getting any older, but I know I am. With all the baby boomers, why would they sell their medical unit?
Because it doesn't make money.
How,
These guys.
That's impossible.
Here, the stock is $13.70, up 95 cents on the day.
Right. Wow.
I mean, that's a pretty nice move.
Yeah. Oh,
of course, they sold that, and they're talking about what they're going to spin off next. And frankly, you got one piece of it that's worth $2.50 a share, and you got another piece that's worth $5 a share, and then there's a question about what that health division is actually worth, and it's clear what the Baker Hughes position is worth because it actually trades under its own symbol, BKGE, and it's worth about $3 a share. So, 5 here, 2 there, 3 there. If it isn't a fire sale, those numbers might be low.
But what I thought was really interesting about GE, and of course Steve Forbes immediately just said, this isn't exactly an efficiently run corporation. He said,
Oh, no.
they have always purchased high
a
and sold
disaster.
low. Yeah, and Maria Bartiromo came back and said, the purchase of NBC was a perfect example. What is NBC worth now? And
Right.
and GE just sold it way too early to Comcast. She said Comcast stole it.
That's what happens. That's the biggest problem, and it's also a problem that we see in the market, especially on a day like yesterday. When people have to raise money, they sell not what they should sell necessarily. They sell what doesn't hurt them. And the old saying is, if you can't sell what you want, sell what you can. And so, GE had a bid for NBC, so, that went at that point in time. It's just fairly common. The best example of that in the market is yesterday's action in the FANG stocks. None of them have any exposure either to China or to tariffs. Google is a service company, kinda.
Right.
Same thing. Apple possibly has a problem with it, but not an overwhelming one. How about Netflix down almost 7% yesterday, $26.50. Of course, the stock has run from 1 to 400, so. That's just an expectable pullback. The fact that it happened in one day and that it's up half of that today, what it was down yesterday. But none of those stocks really had any issues with tariffs or China. And so why were they sold? Well, they were sold because people had huge gains in them. They didn't want to sell stocks that were down. And so what they did was they sold what they could. If you think that anybody took a loss yesterday on the $26 down day in any investor, let's say, not necessarily a trader or someone who trades options or whatever, you're talking about a company that has, a 400% gain, and, people just take some off the table. They also get scared that it's going to turn around. And so they take something off the table because it's there and because they can. Not going to have to worry about the taxes on that until next April.
Wow.
So, you have that kind of activity. The thing that's bothering me right now, actually, is the fact that the financials, which all beat their stress test, which are now in a somewhat stable environment on rates, why J.P. Morgan made a new low for the year yesterday and then again this morning. Goldman Sachs, the same thing. Although Goldman Sachs, traded down to 219 and change, the last is 221 and change. So, you're starting to see some bounces. There is one stock that we talked about last week, that I wrote about last week and the week before, and that we have been trading, and that's CTL.
Oh,
That
yeah.
conversation last week?
Yes.
Okay. So CTL was an $18 stock paying 2%, and we were long the options, the 18s, at around 50 cents. We got taken out of them yesterday on the 100% up rule. So
Wow.
think about that. The market was down 500, and we were selling something on the 100% up
rule. Oh, man.
So the stock, I guess, was recommended this morning from Jeffries, and it's currently down a little right now at 1870, but it opened this morning and hit 1902. There just aren't that many places that you can get that kind of yield with that kind of stock action. And what we'll do is we'll probably sell some of the out of the monies, maybe the 19s or so, against our stock position, which has an adjusted price cost of I want to say 15 and change.
Well, okay.
So we can afford to get it called away. In the meantime, this stock does not run in a straight line, and so we're not terribly concerned. But, we take in the premium. I mean, think about this. If the stock pays 56 cents a quarter, and you can get another 40 or 45 cents by writing a call for a month, then, that's a pretty hefty return. I mean, you're talking about taking it from 12% up to, 16% or 15%. There's nothing wrong with that in a market that can't make up its mind, sort of like the president.
Yeah, he's his own worst enemy.
Oh, he's unbelievable.
You've got an economy that is just on the verge of really exploding, and then all of a sudden all this crap comes out, and it's like, and now this morning threatening Harley Davidson, that they're going to be ruined. I mean, come on. I don't get it. I just don't get it at all. Oh, man.
Well, think about it this way. I consider him to be sort of like Howard Stern. They're both.
Well, he was on the show, right? Yeah.
Yeah, they're both dramatically infantile. They're like little teenage boys who have to tell you over and over and over again how great they are and what they've done. And, it's just kind of a sad situation. The guy is all over the place. Although I will tell you, there was just an announcement that the Supreme Court upheld his travel ban.
Ooh, okay. Well, that's big. Yep.
Yeah.
Yeah.
Yes, it is.
Yeah, because, there have been some really, really good moves. And you just think, what the hell's going on? And then now all of a sudden you're starting to hear some of these guys on CNBC talking about, well, it's a recession's right around the corner. And it's like, really? I don't know.
Anyway, so last week we had no closing trades. We bought a couple of small positions. Like we had the CTL, and we also had some JP Morgan. JP Morgan we lost money on. The CTL we're making substantial money on. And, here we are with the Dow back to up 75, and gold is down, silver is down. Here's an interesting one, and I think I pointed this out to Mike yesterday. Something happened in the copper market that I don't think I've ever seen before in a commodity. It ran up from the $3 area to make a new life of contract high at $331 and change. That was June 7th. We're still in June, and yesterday it was down over 4 cents, which is a chunk for a $3 commodity. But it is within a hair of a new life of contract low. Now, that is really unusual in a commodity like copper because, it's not like trading oats that sell for, between $2 and $2.05 a bushel, and that's the entire range on it for, a year at a time. We're talking about a really important commodity. It's important to the building industry. It's important to the automobile industry with all of the move towards electric and the use of copper. I remember we had a conversation with somebody 3 or 4 years ago that we were talking about how much copper there is in a car, in an electric car. And I think that number was between 500 and 600 pounds.
Oh, my God.
Of copper. So
you're talking a car.
A car.
One car.
Well, between the batteries and, or maybe it was $500 or $600 worth of copper. Doesn't really matter.
Yeah.
The fact of the matter is that when you have a raw material that moves 10% in 12 days from a new high to a new low, that is really unusual, and it just shows you the velocity. There's plenty of volatility in the market, But the velocity of that is, you know, hard to figure. I mean, you really have to be on top of it, you know, in order to be able to withstand this.
Wow.
And frankly, that's kind of why we do what we do, because not everybody is interested, and not everybody has the time to do it the right way. And so, you know, they get the letter, they get the texting service, they can take them or leave them, you know, as far as trades go. But, you know, if you think that your discount broker at, you know, E-Trade or Interactive or something is going to give you a call, you know, we'll give them that other bridge.
That's the old forget about it. Hey, Mike, are the copper mines like Anaconda and a few of the others in Arizona, are they still active, or are they like shut down?
Sure.
Forever? They are. Okay.
Absolutely.
Okay. I didn't know that. I mean, of course, you know, we were working there in the 70s, so, you know, it's okay. Very interesting. It's still going.
Yeah, and you also have to remember something, Greg. You know, a lot of these copper mines can stay in business as long as they want, not so much on the copper. Gold and silver are byproducts of copper mining. And the way
Really?
that the economics the way that the economics tend to work is the gold and the silver that you take out usually pays your overhead because of its relative value.
Sure.
Versus the copper.
Interesting. Yeah.
I mean, we had Mike and I dealt with a company, Copper King Mining in Milford, Utah, and that's exactly the way it was. The gold and the silver literally paid the overhead, and the copper was free. I mean, it wasn't exactly free. I mean, there's still costs involved and moving it and everything, but the fact of the matter is that's very common in the copper mining business.
Mike, what about that?
You don't see a copper company that doesn't do silver.
Yeah. What about that silver company that we had on that's been going since 1800s?
Hecla. You're talking Hecla Mining.
Yeah. Are they still in business?
Sure.
Wow.
Sure.
Because they've been in business since the 1800s. I mean, they just crank away. Wow. Okay.
Yeah, it's funny because you say that, and of course you think, oh, well, you know, this is a company that's been in business for 100 years. Well, yeah, and GE was in the Dow for 110 years. So.
Oh, okay.
You know,
there you go.
Longevity is not necessarily the answer. You know, it's like the hair salon 3 blocks from where I live. I've never seen anybody in it. And I wonder how they stay in business. Well, you know, there's something else going on there.
Laundry.
No.
They're laundering
they
money.
happen to own the building. They happen to own the building that they're in. And so it's a real estate play. It's not really a hair salon play.
Yeah, right. Yeah. Yeah, what's going on in that back room? Oh, yeah, that's the local card game. Oh, my. Yeah, okay. Well, you know, it just seems like the volatility, man. It's just, this is enough to give you ulcers.
Yeah. I mean, to think about it, you know, they keep on talking about millennials don't like the market. Well, the risk in the market is really kind of immense unless you have a plan. Like if I were first coming into making investments in the market today, where we are with the volatility, with the velocity of the market, the only thing that you can really do is something that most people don't have patience for, and that is, you know, do a monthly investment plan where you do dollar cost averaging. You know, if you decide, well, I can save $1,000 this year and put it in, then you put $100 in every month and you buy a possibly differing number of shares. Because if they go up, you're buying more shares. If they go down, you're buying less shares. But the fact of the matter is, in terms of money, that's the safest way to be. You know, I can't stand Kramer, but I have to say there's one thing that he says, and I've quoted it before, there's one thing that he says that's true, and that is you do your homework and everything, but it's really arrogant to figure that you're going to buy something at exactly the best time.
Sure.
And so the best way to do that is to, be patient and, take 10% of your money for 10 months and, do it that way. So if stock goes down 5%, well, so what? So you get 5% more shares. And so, that seems to be an okay strategy in a market that is, I'm not going to say overvalued, I'll just say extended. This is a very long bull market. Mm-hmm. Nobody wants to buy at the absolute top, but, if you're a 35-year-old, you probably have 30 to 40 years of investing ahead of you, and, with that kind of a time frame, it always pays off.
Yeah, you might want to buy GE. No,
Yeah.
no, I've heard of volatility, but you have just mentioned something that I've just noticed, and I don't know, I may have heard it for years, but I never noticed it. Velocity of the market.
Yes.
What does that mean?
Well, the way that we used to think of volatility was really velocity. Now, the volatility that they quote every day, that volatility is done by virtue of figuring all of the numbers for puts and calls that are traded. So volatility is really a function of safety. People buying options to protect their positions. So you own 100 shares of Amazon, and the stock is, trading at 1,680, and you go in and you buy it here. It's not very expensive to buy an out-of-the-money put just to protect yourself, or to write a call just to take in the premium to lower the price of your stock. So volatility is really a function of protection and how expensive or inexpensive it is. Volatility goes up as the cost of doing business goes up, as things really happen one way or the other, in one direction or the other. But velocity is the speed with which you see some of these things move. And I'll give you the best example, which was Netflix. The implied volatility on Netflix was low, while the velocity of the move to the upside was very high. People were not concerned about it. This is why they say investors are complacent. Well, they're complacent when the volatility is low because they're not concerned with protecting their position. In other words, they're greedier than they are scared. Fear and greed are the only two things that you really see on a regular basis here in this market. And so, when you hear about complacency, it always takes place when volatility is low, which means there are less people buying puts to protect than there are buying calls to speculate.
So is it a good time to buy my two favorite companies, Polaroid and Kodak?
Yeah, of course. How could you go wrong? They're both in the Nifty 50.
Nifty 50. Oh,
most people won't get that reference.
Oh, man.
But they were two of the biggest in the Nifty 50, and the only ones that are left are GE is
GE. GE's one of them.
IBM is still left. So
wow, that's amazing.
Let's welcome Rick Schumacher of Pressure Bioscience.
All right.
Yep, Rick's on.
Another
morning, fellas.
Another Bostonian is on the line. Hello, Rick.
Another Bostonian.
How about that?
Good morning, fellas.
Hey, we're doing okay. What's going on at Pressure Bioscience?
A lot's going on. Just as a reminder, we are a life science company with three pressure portfolios. One of the platform is in what we call pressure cycling. We turn pressure on and off, and that's used in instruments and consumables that are sold all over the world to several hundred laboratories that are using it to break open samples for trying to find the next cure, the next strategic program, the next vaccine. The second pressure platform is used to help monoclonal antibody drugs get to market better, faster, cheaper, and with higher quality. And the third one is called ultra shear technology, and this is just new, brand new, and it's an offshoot of high pressure processing, which is what now is a $10 billion market in clean label food. So we've got a lot on our table, but guys, what's really important is that in the last 40 days we've converted $13.6 million of debt into equity as part of our plan this year to uplist to a national exchange like NASDAQ or the New York Stock Exchange Amex.
Ooh, very nice. Very nice. And you've been talking about that for a year. That's great. Good news.
We knew we had to do it. We knew it had to be done.
Yeah,
but
good job.
These are over 40 investors, and they had a lien on the company, and they were getting 10% a year, and there was we had to go and convince them that the best thing for them and the company was to have them convert from the debt side of the ledger over to the equity, which they did. So it took 16, I would say a month and a half ago we had $16.4 million of liabilities and loans. Now we've got somewhere between $3 and $3.5 million. The rest is all converted into equity, which is a major coup. We appreciate that from all 44 shareholders that did it, investors that did it, and now it opens up the path for us to continue our ascent, we hope, to a national exchange.
And you are one of the cancer moonshot companies out there too, which is very, very exciting. Wow, that is great news. That really is. Well, congratulations to the investors who kind of use their head, so they're looking long term.
They are, and you're absolutely right. Hit the nail on the head. They're looking long term. It's tough to give up a lien when you have a lien on all the assets of a company. You're in a pretty good position, but they're looking long term. We think that we are highly undervalued. We think that we've set the company up for success, and certainly one of the things we had to do was get this debt that was very troublesome for us to try to get the company onto a national exchange. It couldn't do it with all that debt, and so now that's out of the way. So now we've got a few other things to do, and we're looking forward to being on NASDAQ or New York Stock Exchange Amex before the end of the year.
That is awesome. Simply awesome. Okay, Rick, the stock symbol for folks who are, we just got a call from somebody. What's a stock? What's a stock?
Yes, well, we're an OTCQB.
Okay.
So we're in the top level, and our stock symbol is PBIO, Pressure Bio, PBIO.
Boy, that's easy. Pressure Bio on the OTC. All right, good stuff. That is amazing news. So do you have a preference, one or the other, NASDAQ or Amex? Or, I haven't heard anybody refer to Amex in so long. Or does it make any difference, really?
They are different, and I've founded or co-founded 3 prior companies, and they've all done well. They are all on the NASDAQ.
Okay.
I'm used to the NASDAQ.
Right.
I run Pressure Bio. Even though we're on the OTCQB, I run it like it's a NASDAQ company. We follow all the rules. We've got a completely independent board other than myself, and we do all the things that one would expect a company to do that's on the New York Stock Exchange or NASDAQ. We're already approved by NASDAQ. We attempted to move up last year. The bank we hired was unable to finish the job, and so we never moved up. However, we've kept our application alive. We've paid a couple of fees, and we've kept it alive because we understand how important it is in terms of liquidity, in terms of the ability for getting to be known. Being on a national exchange is where we need to be. So we've kept it alive. I know they'd have to do a little due diligence at the end, but we don't have to go through from the start. We've already been approved by NASDAQ. So we're talking to both New York Stock Exchange and NASDAQ, and we'll decide in the coming weeks. But right now it's just exciting to look at the balance sheet and see what $16 million in liabilities has been reduced from the loans down to about $3 to $3.5 million. It's a manageable number. The company's doing great. We announced our quarter about a month ago, and we had a record first quarter. For a first quarter, we had our 9th consecutive quarter where revenue from our products and sales increased year over year from the same quarter previous year. That's 9 in a row we've had. We got our first contract for the new platform we have that's helping monoclonal drug companies get to market. So we had a $1 billion company come in and say, we'd like to bring our client in from Asia that's having trouble. We think maybe your pressure technology can help. So there's been a lot of good things that have been happening over the past, 2018 has been a follow-on to 2017. Things are moving in the right direction.
So 7 profitable quarters in a row, right?
No, 9 quarters in a row where
9. Okay.
9 not profitable. We will get to be profitable, but we're growing our technology and our base. We've had 9 quarters in a row where the revenue for the quarter exceeded the revenue from the previous
Okay. Yeah, there's a difference.
Quarter.
There's a difference. Yeah.
We're moving in a path. We know we've got to get to profitability. We're breaking a paradigm that's existed for decades upon decades. We're asking researchers to take a critical part of their research, an absolutely critical part, which is taking the virus or the bacteria or the cell, the cancer cell, the normal cell, from animal, plant, human, microbe, doesn't matter. We're asking them to break it open to release all those great molecules inside that have all those answers we're trying to find. We're asking them to break it open a totally different way, rather than just beating it up, which is what I was taught to do, many, many years ago when I was in the lab for 13 years. Just beat it up. We are asking them to squeeze it by using pulses of pressure. Squeeze and let go until it breaks. And it's so much more definitive. It is so much more controllable that little by little we are getting, particularly some of the key opinion leaders in the world, have now switched over and are publishing and presenting on our technology. And there's about 80,000 labs and 500,000 researchers that have to break open cells every day to get to what's inside. And we've got about 200 of those 80,000 labs. So we've got a ways to go, fellas. But we never had a sales force until now. Now we have a sales force. Now we have a brand new instrument. So we're really excited about where this year's gone and where the rest of the year will take us.
Well, Rick, if you've got some spare time now that you're increasing every quarter, can you take over GE? No, we were laughing about that in the first half hour. I know you weren't on the line, but
why do you think they're moving it to Boston?
I love it. Yeah, within driving distance of Pressure Bioscience.
It's right. It's just about halfway between Rick's 2 locations.
It is. It is. So
now we start the rumors.
I'm going to stop on the way.
Yeah.
I love it. Oh my God! Well, tell us. We have new listeners all the time. What about this new machine you're talking about?
Well, the new machine is really exciting. The machine we had for a few years, the initial machine, was run by a microprocessor, and because of that, it had very limited input and it had no output. So if you were to put a sample into the pressure chamber and squeeze, and we can do 16 samples at a time. if you were to put up to 16 samples in a pressure chamber, close the lid and pressurize it and squeeze it back and forth till it broke, you would have no record. So if you were doing this for anything that had to do with FDA, and many of these companies are, you couldn't do it for that process because you'd have no record. You'd have to write it down. That's not acceptable. So the new system that we designed ourselves in our spare time, we went outside and we got quotes of $500,000 to $1 million to design it and build it. And we said, no, we'll do it ourselves. So we did it. While we continued to grow the company, we developed a whole new system that's computer generated and computer run. And now what happens is you have an unlimited number of inputs. You can decide how much pressure, how long under pressure, and how many pressure cycles, how many squeezes you're going to do. And you can decide that in an unlimited number. And also on the downside, you can download all the data through a USB port right onto a joystick or something, to a thumb drive.
Oh,
so
great.
Now, as an example, I'm not allowed to give the company's name yet. We hope we can. But one of the largest biopharmaceutical companies in the world, their billion-dollar subsidiary, had one of our instruments that ran by a microprocessor for over 5 years. They had one. In the last year, they have bought 6 of our instruments, and we just got a purchase order for 2 more. So there's 8 instruments in 1 year because of all the new bells and whistles it has, mainly because you can now have a record of everything that happened to the sample. 8 in 1 year, and these are $50,000 machines, versus 1 in the previous 5 years. We think that this company is a microcosm of what's out there. So we've hired a sales team, and we're training. They're out in the field, and we believe that the future is one in which we're going to be able to find dozens of other companies, perhaps many dozens of other companies like this one, that instead of having one of our instruments, they could have 8 to 12 of our instruments. Multiply that by 40, 50, 60, 100 type companies, and that's why I feel comfortable that we are marching towards our goal of not only getting on a national exchange, but getting to be profitable in the near future.
So, Rick, let's say, you're getting tons of orders in for the brand new machine. Can you fulfill them immediately?
Good question. Two things on fulfilling. One is you need the money to fulfill them,
right?
And two, you need to have the contract manufacturer. We don't build it ourselves. The instrument is built in an ISO 9001 certified lab, so it has all the right documentation. We got CE mark very quickly to sell in 31 countries in Europe. We got the UL electrical approval, everything, because this is a group about 20 minutes away, and they make instruments for GE Healthcare, speaking of GE, and many other companies. And they're a good company. They're a small company, but they're good. And they started a year and a half ago building one instrument in a month. And now if I went to them with a purchase order and said, starting in 2 months, we need 5 instruments a week, they would build them. It would not be an issue. They've got all the documentation set up. They've been trained. They know what they're doing. So they could build, yes. The answer is if we got a slew of orders, they'd be able to build the instrument. So that's not going to be an issue. It would have been 2 years ago. It definitely would have been 2 years ago. Even a year ago it would have been. Now it's not.
Well, you could take those GE guys out to lunch. I mean, you could buy the GE Healthcare. I mean, it's on the block as of today. So, I mean, why not? Just add it on as another subsidiary of Pressure Bioscience.
Well, guess what? Everything we do is pressure related, and I'd say the folks at GE are under a lot of pressure, so it fits.
That's bad. Oh, you're terrible. I love it, though. It's great. Hey, Charles, what about the stock here? We don't want to get Rick in any trouble here.
No. The stock has, been consolidating for a while, and it needs a little bit more participation in it, making it a little more visible. But the fact of the matter is that, it's been consolidating here for almost the last year. Last year at this time it was a little bit higher, but it's been pretty much between $3 and $4.90. Like I said, for the better part of a year.
Mm-hmm.
So visibility is kind of the interest. Actually, I take that back. I was looking at a weekly chart. It's well more than a year.
Okay.
Yeah.
Okay.
Well, the thing that I remind people is that this stock, our stock was, we did a split, but look, using the numbers from the split, this stock was a year and a half ago. Charles, if you look, it was about $18 a share.
Right.
Now we're around $4. And I tell people, in my opinion, it's not because we messed up, we had some potholes or anything. We've actually done quite well. We know we can do better, but we've done well. We've purchased the company with their platform technology. Again, 9 quarters in a row of increased sales over the previous year. We've got our first contract for the pharmaceutical industry. A lot of good things are going on, but the failure, the very open failure, very public failure of a bank not raising us the money they went out to raise and not getting us on NASDAQ hurt us. That stock, when we first announced the reverse split and that we were going to try to move up to NASDAQ, that stock was at $18. When the dust settled and the word got out that this group failed, the stock was at $3. So
wow.
Even though we had done well, so we believe that we can work our way back up, but we're going to work our way back up through success. And getting back on NASDAQ is important, or on New York Stock Exchange, Amex is important, but also continuing to increase our sales, reduce our loss, move towards profitability are all on the agenda, and that's what we're focused on doing.
Boy, that's very cool. Mike, Charles, questions for Rick?
Not me.
Yeah, what do you expect for this year? What are your goals for this coming year?
Well, I think we had the major goal. One of the major goals is, of course, is to uplist, and a lot of things are dependent on that. But we can't use that as an excuse to not continue increasing our sales. So our second goal is to continue to increase our revenue. Our third goal is to expand the number of users of our new computer-driven equipment. That's very important. A fourth goal is the other two areas. One area that we haven't talked much about is this ultra shear technology. It's all based on pressure. I ask the listeners to go to Starbucks, their local Starbucks, and look at the juice called Evolution. Evolution is a juice that has no additives in it at all, no chemicals. That's what we all want. That's what the consumers are screaming for, is no additives in the food. How do you do that? How do you get shelf life? Well, they do it using pressure. Pressure has been shown to reduce bacteria or even kill bacteria. So what Starbucks does in their Evolution juice is they do what we do with our samples. They put it in a water bath, they close the lid, and they pressurize the water. The pressurized water kills the bacteria that's in the juice, and then they can take it out, slap the label on, and not add any nitrates or any other additives. We have a new method called ultra shear technology. I suggest everyone, watch us closely. We expect that there'll be a lot of good things coming out on ultra shear technology. Very exciting. It does what high pressure does. It is high pressure. The difference is that instead of just bringing up the pressure and bringing it down like Starbucks does with their juice, we take the pressure up and then we release the liquid through a series of valves that shear or cut the material. So if you've got viruses and bacteria or mold, it gets killed, it gets sterilized, and you can do this with a number of foods, the dairy area, milk, cheese. You can do it with things outside of the dairy area, such as paint and lubricants. We actually make what are called nano emulsions. We put liquids together that don't normally go together, and they stay together because they get sheared and they become a nano emulsion. So it's very exciting. There's a lot of potential in this. We have 2 patents issued. We have more, we think, that are going to be coming in the coming months and year. So I'd say, keep your ear to the railroad track on ultra shear technology.
Wow. Do you have any competitors in that space, or is this your baby?
Well, ultra shear is a method that it's not the ultra shear itself that's patented. We patented a very novel way to scale it up. It's one thing to sit on the lab bench and ultra shear, take 2 things like vinegar and oil, put them together, and when you shear the oil, you cut the oil droplets to such small particles it actually goes in. So water and oil, vinegar and oil can mix together in a what we call a nano emulsion.
Wow.
You can do that on a tiny scale. But when you try to do it on a commercial scale, it can't be done. We think we can do it. We have 2 patents issued on scaling up to very large manufacturing level amounts in doing ultra shear. So we don't have patents on the ultra shear itself, but we have patents on scaling up ultra shear, and quite frankly, we haven't seen anybody else that's been able to do it. So we're excited. Imagine putting
Who's the customer for that, Rick? Who's the ultimate customer for that?
There's cosmetics are emulsions, right? What if you could do cosmetics that didn't separate? What if you could do paint that didn't separate after you bought it from Home Depot and left it on the shelf for a couple of weeks? What if you could do salad dressing? What if milk? You could kill all the bad stuff in milk and ship it at room temperature around the country, around the world. It's an amazing technology for ultra shear. We believe we have a way to scale it up. I'll give you one real-world example. The buzzword now, one of the big buzzwords is CBD, the cannabidiols. A lot of people. It's hard to go to a cocktail party now without someone talking about CBD. And CBD is a compound that comes out of the cannabis plant.
It just got an FDA approval yesterday, I think.
I did not see that.
Yes, it did.
Which company? Was it the GW?
I don't remember, but I remember it was for it was the elimination of the THC, and it was for
probably CBD. And
it was CBD, but it was for I'm trying to remember what the use was. Epilepsy for
wonderful.
Seizures. A seizure medication.
That is absolutely wonderful news. CBD, there's not enough scientific data, but there's so much circumstantial evidence out there, especially in seizures and anti-inflammatory, in anxiety, in so many places. But CBD comes out of the plant in an oil. Our human body doesn't ingest oil very well. We believe we could take CBD oil from the plant and we could break the oil down to nanoparticles so that it would go into solution. So you could actually have CBD water, CBD-infused Coca-Cola, CBD-infused juice. We believe we could do that. And we are working on ways of scaling it up. Again, to get 1 milliliter doesn't help much at all. But to be able to scale it up to do liter quantities an hour would be terrific. And we believe that we potentially could do that. So we're working on it, and I just suggest, everyone should keep their ear to the railroad track. It's a major.
When you talk about this, I'm assuming this is a different product and therefore a different piece of equipment.
It is.
Okay. And so what is that piece of equipment cost vis-a-vis, your other equipment that's, $50,000 a shot or
we don't have that equipment. We have a very small scale. We need to build that equipment, and we have a plan. I can't go through it right now, but just stay tuned. We have a very definitive plan on how to build this equipment because one could guess if we're able to make CBD oil water-soluble, what would that mean, both financially to the company and to the world to be able, because it's all about bioavailability. If you've got a compound inside of inside of oil, you're not going to get a lot of that to become bioavailable. It's just not going to happen because you're not ingesting and digesting the oil. So it's going to come in the body and go out the body, and maybe you might get 5 to 10%. But if you could get it into a water solution, then it becomes much more bioavailable.
Boy, that's great.
It's very exciting for us. So to Mike's question this year, one thing in the second half of this year, we've got plans to work on the machine, the instruments, and and proof. Proof is in the pudding.
Boy, that sounds great, Rick. It's been a while since you've been on.
Would that be something else that you would contract out, Rick?
We would be.
The other equipment is manufactured separately.
Yes, it would most likely be something that we could go to all of the manufacturers of. It depends on what, if CBD in this case, or CBG, or paint or milk. We could go to them with the machine, and but there's other ways to.
So is it more of a
licensing?
Is it more of a licensing play for you guys to kind of? I always think of licensing stuff as something where the overhead is dramatically small and the payoff is dramatically big because you're not using all of the money vis-a-vis having a manufacturing facility and cost of equipment and cost of raw materials and everything. Is that kind of what this would look like?
Right now, that's exactly what it looks like. It would be a royalty licensing play. So we have our core business in which we sell instruments and consumables. It's growing. And then we have the other two businesses. One is helping to make improved monoclonal antibodies, protein drugs, and that could be a royalty play with the new licensing that we have or the new patents we have, and then the other is ultra shear with the patents we have there too. So yes, I think we're setting the company up well for potential success down the road, and so right now it's we don't think the value has come into the stock based upon the value that we have in our proprietary technology and patented technology.
All right, Rick Schumacher, Pressure Biosciences, and that's PBI on the OTCQB. You have been listening to Money Info, brought to you by Princeton Research. Get that newsletter every Sunday night, princetonresearch.com. This is WPSL, Port St. Lucie.